Hello everyone, welcome to my video on ratio analysis. I'm going to start off with looking at liquidity ratios. Liquidity ratios are the ability of the business to pay off their short-term debts. Now, if a business can't pay its short-term debts, then it means it can't pay its suppliers, it may not have enough finance in order to pay its workers, and it's generally experiencing cash flow problems. Which could be a real problem for them. Ultimately, if you don't have cash flow and you can't pay your workers, they're not obliged to turn up for work. If you can't pay your suppliers, you can't get hold of stock. So it's really important that businesses have good and functioning liquidity in order to operate as a business. And our liquidity ratios are a measure of this. So we've got two types of liquidity ratios. We have the current ratio, and we have the acid test ratio. They're very similar, it's just the one of them is taken into account stock and the other one isn't. So, we have to, in order to be able to calculate these, we need to look at our current assets and our current liabilities from the balance sheet. So we go to the balance sheet and there they are. And we need to add these up. So if we take our 3,000, our 6,300 and our 2,700, we know we have £12,000 or 12,000 million worth of current assets. But we also need to have the sum of our current liabilities. So add these up here, which gives us £19,800 worth of current liabilities. Okay, so to calculate our current ratio, we're going to take our 12,000 and divide it by our 19,800 because it's calculated by our current assets divided by our current liabilities. So we take those numbers and we put them in this equation. So I can tell you that that is equal to 0.61. And we would express that as 0.61 to 1. Yeah. So that's our current ratio. Now the main question is, what does that tell us? What that tells us is that for every £1 of debt that this business has, short-term debt, so it's things like its creditors and overdrafts, it has 61 pence in order to pay that off. So ultimately, if it had to pay all of its short-term debts tomorrow, it would not be in a position to do that. So that would be really difficult for them to manage. Doesn't mean that they have to shut down immediately, but it does mean that they have a lot of short-term debts and they could be living from hand to mouth, or meaning that they need to sell their stock on a regular basis in order to be able to pay those debts. Yeah. So typically, what's considered a good current ratio is 1.5. That's a very safe current ratio. If it's less than 1, as is the case with this example of a supermarket, then that's considered a problem. Yeah. And we have another liquidity ratio that we consider, which is the acid test ratio. So the acid test ratio is very similar to our current ratio, apart from this is not including stock. And the reason why we have a separate equation that doesn't take into account stock is the fact that if stock goes off or stock can't be sold, then the value of stock is zero. You imagine there are many places up and down the country which bought fidget spinners in large quantities, and they seem to go out of fashion very quickly, almost overnight. And that stock, they can't sell them anymore because no one's interested in buying fidget spinners anymore. So the value of that stock is zero. So it's always worth considering what the current ratio might look like without stock, which is exactly what the acid test ratio is. So we'll put our numbers into this equation. So we know that all of our current assets are £12,000, but we've got to take away our stock, which is 3,000, or I should say 12,000 million, and we know that we've got 3,000 million worth of stock. So we'll take that away, and that which gives us 9,000 million pounds worth of stock, divided by our current liabilities. So our current liabilities, as previously, is 90,800. Okay. So our acid test is 0.45 to 2 decimal places. So we can say that as 0.45 to 1. Which again shows us that this business is not in a very good position in terms of liquidity. So ideally the figure for the acid test ratio should be greater than 1. In this case, it's very much below. It's not even above 0.5. So we know that this business potentially could have difficulty paying its short-term debts. There are some other things to consider. A supermarket tends to carry a lot of stock, and it buys its stock at a very low rate and sells it with quite a considerable markup. So it might be possible for some businesses to survive without having a very high current ratio if they can sell their stock very quickly. So bakeries might be a good example. If you think about the actual cost of making a bun is very cheap. It's a bit of flour, some water, some yeast, some sugar, and possibly some milk. So we know that if they're constantly selling their stock and they're sure to sell their stock, and they do so on a daily basis, that stock will be increased in value when it's sold, and so they may be able to function with a very low current or acid test ratio. So was there anything else? No. Oh yes, how might we improve our current ratio? Well, ultimately it's coming down to our stock, whether we can sell that stock effectively at a higher price than it was valued at. So stock on the balance sheet is valued at the price at which it was bought at. When it's sold usually for a significant markup, which means that you'll get more cash for it than that if it's sold. So selling stock could improve the current ratio. Perhaps getting hold of some additional finance from somewhere. You could sell some property or use some other parts of the balance sheet in order to get hold of that funds to make sure the business has enough short-term liquidity available in order to keep functioning. Typically, your trade creditors are very concerned with your acid test and current ratios because it shows your ability to meet those debts. So if you can't meet those debts, the chances are your suppliers won't give you any more credit in order to continue to function, to buy stock in order to sell. So that might make it really difficult for you to function as a business. Anyway, I hope that's been helpful to you.